The smart money is buying Bitcoin because it is the crypto commodity network. It is the decentralized asset without an issuer. Right? The dumb money is buying everything else.
That's right. That's right.
So I don't worry about the people joining our network. We're winning the smart ones, and they're going to fight to defend the values of Bitcoin. You want to worry about it, right? Your enemies aren't the people buying Bitcoin because they want a decentralized crypto asset that's without an issuer. Your enemies are the people that are buying an inferior asset like gold or real estate or equity or bonds. Those are the people that actually have the vested interest in undermining Bitcoin.
BlackRock's foray into Bitcoin has sparked significant controversy. Critics have highlighted CEO Larry Fink's past skepticism towards Bitcoin, previously labeling it as an index of money laundering. Moreover, BlackRock's substantial influence in Wall Street and close ties with regulators, particularly the U.S. Securities and Exchange Commission, have raised concerns. Under Chairman Gary Gensler, the SEC has exhibited a notably anti-crypto stance. Since BlackRock's application for a spot Bitcoin ETF last year, critics have feared the firm's potential to amass and control excessive Bitcoin through its ETF. Indeed, BlackRock has been aggressively acquiring Bitcoin. Data from BlackRock's website indicates that the iShares Bitcoin Trust now holds approximately 187,5031 Bitcoin, valued at over $12.59 billion. On a single day, Tuesday, the asset manager purchased 12,623 Bitcoin, marking its largest daily acquisition since the ETF's launch in January. While the extent of BlackRock's intentions or ability to influence Bitcoin remains uncertain, some, like investigative journalist Whitney Webb, have cautioned against the possibility of co-optation. However, MicroStrategy Executive Chairman Michael Saylor remains unfazed. In a recent discussion with Natalie Brunell, Saylor expressed confidence in the ETFs and dismissed concerns about firms like BlackRock posing a threat to the industry's autonomy and growth. Before we continue with the rest of the video, do check out Daily 5-Minute Crypto Newsletter with all the latest crypto and Bitcoin news. It's a fantastic analysis of on-chain crypto data and breakdowns, and the best part is it's absolutely free. They'll cover expert predictions, breakdowns of on-chain crypto data, and any breaking news you need to know, all in a nutshell. Click the first link in the description and enter your email to join over 50,000 others in becoming a better crypto investor right now.
I think it's continuing to decentralize. I think that every single time you have a new participant in the network, they decentralize the network further. And I think that the more participants we have, the less likely it is that someone will corrupt the network. I think that if you have powerful companies and powerful owners in 100 different countries, the network is less likely to be corrupted. Its integrity is enhanced because now you have strong political actors with a vested interest to keep anybody from attacking the network. Fill in the blank. If a country in the Middle East decided that they wanted to buy a lot of Bitcoin, I don't think they're taking over Bitcoin because 99% of the Bitcoin is in someone else's hands, and they triple the price of Bitcoin. And so the 99% of the people that hold the rest of Bitcoin just got 3 times as powerful. And so there's no way for someone to join the network and undermine the network. They're strengthening the network as they join it. What they would do is if a big player in the Middle East joined the network and became embedded and had skin in the game, if the US government took an adverse position, you would have another sovereign that would take the opposite position. Mm-hmm. So if you're worried about one country or one company having an influence, then the best thing that could possibly happen is have 10 other companies in 10 other countries, because now you have a network of interdependencies and you have checks and balances throughout. And I think that we've got more and more checks and balances. And as people invest more in the network, they become more conservative, and they will resist, enthusiastic proposals to fix Bitcoin. Mm-hmm. It's very easy. I notice that most enthusiastic proposals to fix Bitcoin come from people that don't have any Bitcoin, right? And if you actually bet your entire country on Bitcoin, then you wouldn't be so enthusiastic to tinker with the network. If you bet your entire company on Bitcoin, then you wouldn't want to tinker. So ironically, these bigger actors are actually more conservative. They like it because they can trust it, and they can trust it because no one's changing it. If you take certain other crypto networks where they change them every 6 months and they tinker with them, every time you do a hard fork, you could destroy the entire thing.
Right.
So who is in favor of hard forks? It's generally the protocol developers that want a job. They want to do something to help. They're the only ones that can do the hard forks. So they're the ones that promote them. Who doesn't want to do the hard forks? It's everyone that's bet their life, their future. If you're actually planning, if you're buying a lot of Bitcoin to give to your great-great-granddaughter, you're not terribly enthusiastic about a roadmap with 6 hard forks, right? There's no way for any one actor to get control of the network. All you can do is empower the rest of the network by a factor of 100. And owning a lot of Bitcoin doesn't really give you power. I mean, the network,
Right.
The network is stabilized by a combination of computer power, electric power, political power, economic power, right? And transactional power. So, Coinbase and Cash App have power, but that's different than the BlackRock power. And that's different than the Marathon or the Riot or all the Bitcoin mining power. And that's different than the power of all the node runners. And that's different than the power of the regulators or the politicians that support it. And so there's a lot of different power in the network, and it's just getting more decentralized.
Saylor's perspective on BlackRock, Fidelity, and other firms offering Bitcoin-based investment products is one of acceptance rather than antagonism, as he recently articulated during his speech at the Bitcoin Atlantis conference. According to Saylor, Bitcoin has no enemies. Rather, it simply has individuals who have yet to recognize its value. He acknowledges BlackRock and Fidelity's recognition of their clients' growing interest in Bitcoin, seeing their involvement as a means to bolster the network's strength further. In his conversation with Natalie, the MicroStrategy executive chairman elaborated that each new investor from BlackRock, Fidelity, or their affluent clientele purchasing the ETFs adds a fresh perspective to the network. These voices supplement the existing millions of retail investors and supporters. Saylor also commented on the remarkable success of the Bitcoin ETFs, citing data from BitMEX research indicating that the combined assets under management of Bitcoin ETFs exceed $52 billion. This figure surpasses half of the AUM of physical gold ETFs, which currently stands at $91 billion. Here are additional excerpts from Saylor's interview.
I expected the ETF launch to be successful, but I think it's quite impressive just how successful it's been. At this point, we can see that these ETFs are going to surpass gold ETFs in not too long a time. The Bitcoin ETFs are the most successful ETF launch in 30 years, and apparently in the first 30 days, they outperformed every other ETF. They've crawled to the top of 3,500 competitors in short order. And I think that they have sparked, the bull run and the upward movement in the price. I mean, definitely there's a huge amount of institutional capital flowing into Bitcoin right now that is driving the price because of asset scarcity. I think the most important thing, or the most important result of this is the ETFs themselves represent regulatory clarity for Bitcoin as the institutional grade crypto asset. I think that's a very important thing. I think secondarily, the ETFs represent an on-ramp for institutional money, and they open up a gateway between $100 trillion or more of institutional money and Bitcoin. I think the third thing is they have sparked this price action, and as Bitcoin moves back toward its all-time high, they have generated an extraordinary amount of media coverage and Wall Street awareness, and Bitcoin benefits from the awareness of the asset class, because as of now, 99% of the mainstream investors really have an incomplete understanding of Bitcoin, and the best thing that we could do is just build awareness that it is an asset class, and then people will start to do the work to understand what it is. And so all three of those things have been catalyzed over the past month by these ETF launches. But Bitcoin, it's like Bitcoin didn't have a website, right? Bitcoin didn't have a website for institutional investors, and about a month ago, Bitcoin all of a sudden became something. You type it into, your Bloomberg, you type it into your Robinhood app, or you type it into any stock, E-Trade or any stock trading app, instant information. You can buy, you can sell. And of course, those ETF tickers, they don't just give people, perfect awareness and ability to transact. That's also the global protocol for trading volatility or for issuing credit. So if I had a bunch of money in Bitcoin and I wanted to get a loan against it, it might take me a month or 2 months to find someone that will give me a loan. Then I have to move to Bitcoin. Then I have to pay double the interest rate that's normal. And that's kind of scary. But after the ETF, people could have the same economic value in Bitcoin with JP Morgan or Merrill Lynch or Bank of America. And they could just say to this broker or banker they've been doing business with, I bought a house, I want a big mortgage on it, and I'm going to post a little bit of my Bitcoin as or securities as down payment against that mortgage, and I use it to get a mortgage, or I use it to get a margin loan, or maybe I could hedge against it. And so these ETFs opened up an entire financial world of awareness and opportunity and functionality to the 99% mainstream investors. And you really can't underestimate just how profoundly important that is.
Both critics and supporters of BlackRock's entry into Bitcoin have presented compelling arguments. While there are undoubtedly risks associated with major Wall Street players like BlackRock joining the fray, the potential benefits far outweigh these concerns. What are your impressions of Saylor's interview? Do you share his view that BlackRock doesn't pose a threat to Bitcoin, or do you believe we should approach their newfound interest with caution? Feel free to share your thoughts and observations in the comments section below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.